Lyft reporting better than expected earnings in its latest quarter, and the company's now giving upbeat guidance, saying that gross bookings should accelerate into the end of the year. Joining us right now is Lyft's CFO, Erin Brewer. Good morning to you. It's nice to see you looking at the stock on a nice little move this morning, up about 6.5%, close to 7%. You're now at $21.42. We were saying if you move that chart back just a little bit, the last time I talked to your CEO, I was out in San Fran sitting where you were, and the stock has really taken a nice move since August. What's happening here? You know, we talked to Uber's CEO earlier this week. How much of it is just the wind at the back of this whole industry and space? How much of this is operational and taking share from other competitors?
Yeah, great question. You know, rideshare is still, if you think about the whole market opportunity, still relatively underpenetrated. As we look at our business, both in North America and now in Europe, we see a $300 billion personal vehicle trips happening, and rideshare is just penetrated only a portion of those. And so it's a growing industry. We are certainly a growing platform, as you've noted. Gross bookings up 16% in Q3. We're going to accelerate that into Q4. Adjusted EBITDA up 29%. We generated $1 billion of free cash flow over the trailing 12 months. Our marketplace has never been healthier, and we see great opportunity accelerating into Q4 and into 2026.
Tell me about pricing, because there have been periods of time where obviously there's been a super high price, which is you've been able to capture margin. There have been other periods of time where you've been able to capture more volume. Where are you in that?
Yeah, I would say pricing overall is stable. It's really important in this industry to price competitively. Pricing is stable overall. We have great products that exist, you know, at the more budget end of the spectrum, at the higher end of the spectrum. We see those modes pretty stable. In fact, at the higher end and some of our premium modes, we saw growth about 50% year over year. So we like where we're positioned with offerings for everyone. Pricing overall, though, I would say is stable.
Where are you in terms of thinking about the customer? You know, there's been this sort of, people talk about the tale of two countries, tale of two cities. You know, high-end luxury consumer doesn't seem to care about price. It's as elastic as elastic can be. On the lower end, we constantly hear from companies saying that they're getting pinched.
Yeah, the consumer is resilient on our platform. We saw a record number of riders taking a record number of rides. And that includes our entire company, but also in North America. You know, looking back less than a week ago at Halloween, you know, whether you look at the day, the weekend, or the entire week, we smashed records in terms of rides, riders, the number of drivers spending time on our platform. So we are not seeing weakness. We are not seeing trade down in modes. And from what we can see, the consumer remains resilient on our platform.
What's marketing spend like, and what's working for you and what's not right now?
Yeah, absolutely. You know, we spend our marketing dollars in a variety of ways. We run a dual-sided marketplace, so some of those dollars are deployed against balancing demand in real time. And of course, you've seen us out there, hopefully a little bit more in terms of reminding the consumer that Lyft is a great place to ride. Check Lyft if you've been in New York and San Francisco. That's been a super successful promotional campaign for us. We just announced a partnership with United Airlines yesterday, which we're excited about. So you've seen some marketing behind that. So those are some of just a few of the examples of how we promote, how we incentivize riders, and how we promote the company overall.
And then where do you think we are in robotaxi land?
You know, autonomous vehicles, we think, represent a great opportunity, and we feel really well positioned to take advantage of that. We think they will expand the market overall. We've got a number of partnerships in place, some cars on the road today that'll expand into 2026. We talked a little bit on our earnings call yesterday about our upcoming launch in 2026 in Nashville with Waymo. It's a pretty differentiated model that we're excited about. But overall, this represents a great opportunity for our company, for our industry.